freedom. The Peter Schiff Show.
Hello, everybody from New Orleans. This is Peter Schiff here at SchiffRadio.com. Taking your calls, 855-4-SCHIFF, 855-4-SCHIFF. I'm doing this show live from the Hilton Hotel here in New Orleans. I'm here for the annual New Orleans Investment Conference. Great event. Those of you who haven't been here before, make a point, maybe come next year. Anyway, a lot is going on today, a lot of overnight news affecting global markets around the world, and that is the deal announced overnight out of Europe. This is a solution to the European sovereign debt problem. Will the solution work? It's not a chance it's going to work, but it will work in the short run, and that's exactly what I've been forecasting. I said that the Europeans were going to put a Band-Aid on this, and they did, and I said the markets would like it, and they do. What did they agree to? They agreed to increase the size of the bailout fund to €1 trillion, which at today's exchange rate is better than 1.4 trillion US dollars. But one thing that they did right, or at least partially right, because pretty much we did everything wrong in our bailouts, is at least they are requiring Greek bondholders to eat a 50% haircut on Greek debt. So they're going to take losses. You know, when we bailed out our financial institutions, we made the bondholders whole. At least the Europeans aren't dumb enough to follow in that example, even if they're not doing everything perfectly. Now, I don't think a 50% haircut is going to be enough. I don't think that the Greeks can afford to pay half of what they borrowed. I think there are going to be more haircuts coming down the line, but at least that's a step in the right direction. But also part of the thing that I think the markets are going to like, they've got some real agreements out of Italy to make substantial cuts in government spending, more free market type reforms. They're trying to build a firewall around this situation, prevent it from spreading, try to contain the moral hazards. And I said that they would do that, and they have done it. Long term, I think that they haven't solved these problems, but I think they have swept them under the rug. And it's going to take the pressure off the euro and put it right back on the dollar where I said it's belonged all along. Now, the markets around the world are rallying. I mean, the Dow is up 222 points this morning on the news. That's just under 2%. But the German DAX is up better than 5%. The French 40 is up almost 6%. Hang Seng last night was up 3.5%. So the markets are giving this the thumbs up. They're also dumping bonds. Bond prices are falling all around the world, the U.S. included. The yield on the 10-year U.S. Treasury all the way back up to 3.3%. The 10-year is back up to 2.3%, or just a hair under. This is the highest the yield has been on the 30-year since early September. On the 10-year, this is the highest rate that the 10-year has had since early August 11th. This was the last time the 10-year yield was this high. Clearly, yields are now higher than they were when the Fed announced Operation Twist, the goal of which was to bring interest rates down. Instead, interest rates are rising. Also, if you look at the dollar market, like I've been saying, if we had a big rally in stocks, which I had been forecasting on this show would occur, that we would have a big drop in the dollar, and the dollar is down. The dollar index is down better than 1 full percentage point today. The dollar index is at 75.17. You're having major moves across the board. The euro currency back above 140, up 2 full cents today at 140.60. A big breakout. I've been talking about that head and shoulders bottom in the euro. I know there are a lot of people short the euro. They're feeling some pain. They're going to have to cover those positions. But it's not just the euro. Look at the Aussie dollar, up 2.6 cents. You need $1.07 this morning to buy 1 Australian dollar. That's almost a record high. I think the record high was around 110. Looks like we're headed there quickly. Canadian dollar back up to parity with the U.S. dollar, 1-to-1. I think that currency goes higher. Of course, one of the big news, one of the big stories, Japanese yen, dollar, new all-time record low against the Japanese yen, now trading solidly below the 76 level. The dollar only buys you about 75 yen and change, and that is despite the talk from the Japanese finance minister about propping up the dollar. Now, the yen is down today against just about every currency but the dollar, right? Because the yen is only up about 2/3 of 1%, while currencies like the Australian dollar are up 2.5% on the day. The euro's up 1.5%. So that means the yen is falling against other currencies, but it is rising against the weakest currency on the planet today, which is the U.S. dollar. Gold not doing that well today, only up about $2 on the ETF. I guess, the world is happy today, and they don't necessarily need a safe haven. They want to get rid of the dollar, but they don't necessarily want to buy gold. They're buying stocks. Silver, though, having a better day. Silver now above 33 at 33.20 on the ETF, up 70 cents. Silver is probably getting an extra bid out of the fact that it is also an industrial commodity as well as just a precious metals. So the silver chart looking really, really strong today. Money coming in to silver. Oil, look at the oil market. Oil up almost at $93 a barrel, up $2.50 a barrel. This is going to continue. I think. And what it's going to do is going to elevate this crisis. As I've been saying all along, the sovereign debt crisis is not contained to Europe. Right? We heard that word before in subprime. The experts said it was contained. It wasn't contained. And it's not contained now. It's not just going to be these pig countries in Europe that have to deal with their sovereign debt crisis. It's going to be America. Now, I don't think it's going to happen tomorrow. Right? I think it could be a few more months away, though, because I think what it's going to take to put the U.S. in the spotlight is going to be more weakness in the dollar. So we get this dollar index to crack below 70. Right, that's about another 5 points down. That happens, you're looking at a euro probably trading above 150. You're looking at other currencies like the Australian dollar at record highs. That starts to happen, and especially if it puts more upward pressure on interest rates, which it's already doing. But if that continues, then you've got a pretty good sign that the sovereign debt crisis in the U.S. is not too far off. And that is going to be the beginning of the real economic crisis. What we've experienced thus far, again, just the warm-up, just the overture. The opera hasn't even begun, let alone the fat lady having a chance to sing. That's still a long time from now. And, looking at this chart, this is a powerful, if we close a yield, I'm looking now at the 10-year. If the 10-year closes above, let's say, 2.4-ish, around there. Right now we're just around 2.3. I mean, we could have a pretty big move quickly all the way back up to 3%. Now, 3% is still low by historic terms, but it's not low for a U.S. government that's loaded up with debt. It's not low for a bunch of homeowners that are already having trouble with their mortgages. And, the government's plan, get another wave of refinancing. Well, if the bond market doesn't cooperate, you get this bigger spike up. Now, we're right at a key level. I mean, maybe something will happen, and maybe bonds will rise from here. I mean, we haven't broken out above the resistance. Other things have broken out. The currencies have broken out. The dollar's broken down. I think precious metals have broken out. I think stocks have broken out. And again, if you look at the charts, I've been talking about this. Look where the Dow Jones is. I think we're heading back up to the highs, which for the Dow is probably move up to around 12,600 to 12,800. Now, we're almost there, right? We're almost there now at 12,100. The key is going to be, are we going to be able to make significant headway through those highs? That I don't know, because I still think this is a bear market. So I'm feeling that there's going to be some type of problem that will emerge up around the area of the highs, and the problem might be that the weakness in the dollar finally becomes too much of a good thing. Of course, as far as I'm concerned, it's not a good thing at all, but the markets in the short run have regarded it as a good thing, even though it's not. Anyway, we will be right back. You're listening to the Peter Schiff Show here at SchiffRadio.com. Stick around. We'll be right back. It is Peter Schiff here at SchiffRadio.com, live from New Orleans. Hey, gold is now joining the rally party. It's now up a little over $8. Silver up almost a full $1 now, as the precious metals are becoming a little bit more precious, although the gold stocks have been doing very, very well. That Huey index, HUI, that we talk about all the time is almost at 570 now. Just not too long ago at the lows, that index was below 500. It got down to 480, had a huge rally. And again, it is a breakout, in my opinion. I think it's headed back up to the highs of around 640. So if you thought gold stocks were suitable and you were waiting for a time to buy, the time to buy is now. Was better time last week, but not too late. Also on the precious metals, as I said, all last week. Silver looks really, really strong. Gold, too. I think you're going to see rallies back up to the highs, maybe, just maybe before year end. Just make sure, avoid the scams, avoid the rip-offs. Don't buy numismatics. Buy the real thing. If you're not sure what I'm talking about, go again to my website at goldscams.com. Download that free special report. You'll know what to look out for. You won't get burned. Share it with your friends. You know, I talked on yesterday's program about Obama's new plan to basically forgive student loans is really what I think it amounts to. And I think this is the camel's nose under the tent. To forgive student loans. It is a huge moral hazard. I wrote a commentary about it. It's up on the Europac website now. But really what this is going to do is this is going to give the universities carte blanche to jack up tuitions like they've never done. And we're about to see over the next few years college tuition costs just go into the stratosphere. And, of course, the students aren't going to care because they're not going to have to pay for it. You know, it's all the taxpayer who's not even involved in the negotiation process. But I'm bringing it up today because on MSNBC, no, that's not, it wasn't, wait, where is that, the clip? It's Melody Barnes. She was on CNN with Wolf Blitzer talking about how the president's approach to loan subsidies and guarantees is actually helping to contain college costs or tuitions. The exact opposite of what it's actually accomplishing. Take a listen to this. This is cut number 3.
Tuition costs are going up. In fact, the College Board just put out a report talking about that today. And if you look at things that we've done since day one in the White House, expanding Pell Grants, the American Opportunity Tax Credit, those things, even though costs have gone up, have managed to stabilize costs for families. The problem is, as people are struggling, they're having to borrow more. And that's what today's announcement was about.
But why do they have to borrow more? Because the president's plans have enabled colleges to raise prices. Now, when she's saying that we're helping to contain costs for families because we're helping to subsidize the higher tuitions that our own policies are promoting, she is not giving any consideration to why. What is so unique about college? Why would college tuition prices rise so rapidly? Why would they rise more rapidly than any other prices, including healthcare prices? He actually confronts him with a little bit of this because apparently Senator Lamar Alexander, although not completely on point, talking about other ways that the government is interfering in causing college tuitions to rise without actually mentioning the elephant in the living room, meaning the loans and the loan guarantees. But here is cut number 4.
The point he's making is that tuition is going up because of all the federally required mandates on these universities and colleges out there. They have to raise tuition. How do you lower that? How do you ease some of those regulations, burdens to keep the tuition down?
Well, tuition is going up because state budgets are also feeling the crunch. But I also heard what Senator Alexander was saying. He was talking about costs like health care. I hope that means that he's now becoming a fan of the health care reform bill that we passed.
Yeah, so she's blaming higher tuitions on the fact that states are cutting back their budgets. Well, states are cutting back on a lot of things, but what is enabling college tuitions to behave differently than other areas where the states are cutting back? And it's because the customers, the students, are able to get their hands on this wad of government cash to pay for tuitions. And now that the students are being told, hey, you know, they're not really loans. You're not going to have to pay this money back. Now there is no more stigma. Borrow, the sky's the limit. Who cares? 200,000, 300,000, 400,000. I don't care what college costs. In fact, if we're going to forgive all the loans, I'm an idiot if I try to shop around and get a good deal. Why should I try to get a good deal? Why should I live at home and go to a community college when I can live off campus in Hawaii and go to a university down there and have a lot of fun, because it's going to cost me the same thing no matter what, because whatever I borrow is going to get forgiven. This is really, really about to get ugly at a time when we're broke as a nation. We ought to be thinking about ways to reduce our burden. You know, what is President Obama basically doing is he's really throwing $1 trillion of student loans onto the national debt, and it's not going to stop at $1 trillion. You know, in the last year, student loans increased by $100 billion in 1 year. This is a record. It's going to top it. It's going to keep. We're going to pile on maybe 150, 200 billion, 300 billion a year of student loans that the students know damn well they're never going to have to pay. You know, and this is a third-party payer. You know, this is the problem in the healthcare industry. If students are shopping for colleges and putting the bill on the taxpayer, now the student has no incentive to get a good deal. He wants to pay as much as possible, so he gets the biggest subsidy as possible, right? I mean, why not? If someone else is paying the bills, if you're going to buy a car and someone else is going to pay a bill, why would you buy a Volkswagen when you can buy a Mercedes, right? Why? You'd be an idiot. Right? It doesn't matter. Why not buy the best car somebody else's money can buy? And the colleges, hey, they know it doesn't matter how high they raise their tuitions. It doesn't matter because the people that are paying the bill are not even part of the negotiation. See, normally, if you're a business, you have to worry about raising prices because maybe some of your customers won't want to pay the higher prices. But if your customers have to pay the price no matter what, if there's a third party that's making the decision on buying it without any regard to what it's going to cost, what do you think is going to happen? I mean, this is basic economics. It's amazing how nobody in Washington has a clue about something like basic economics, including the Secretary of the Treasury, Timothy Geithner. I want to play some sound from Geithner's interview on MSNBC. Listen to how Geithner, first of all, he admits that the U.S. economy is in bad shape and getting worse, which is, you know, at least he wants to admit what should be the obvious. Here, cut number 6.
Is the economy getting worse?
It's still very tough out there. I think people are very frustrated and still hurting a lot.
But is it getting worse?
The economy as a whole, the economy is just not growing fast enough.
Are you convinced we've hit rock bottom? Could there be a second recession?
I think the strength of the economy right now depends overwhelmingly on two things. It depends on how successful Europe is in resolving its financial crisis. But it also depends on what people do in Washington. And again, if Congress does not act on these proposals in the President's Jobs Act, then taxes go up for all Americans, most Americans. They go up for most businesses. Growth will be weaker. More Americans will be out of work longer.
All right, so in other words, what happens in America depends on what happens in Europe. That's his excuse, playing Europe. Hey, you know what? I'm out of time on this set of clips. I want to talk about this more, and I got a bunch more Geithner sound. I'm going to play that at the top of the second hour. Coming up next, I got a guest joining the program, the guest that didn't show up, I think, yesterday, so we've got him back today. So stick around. We'll be back. This is Peter Schiff here at SchiffRadio.com, the gold standard in talk radio. And this is Peter Schiff here at SchiffRadio.com. Joining me now, my guest James O'Keefe. James is a 27-year-old president of Project Veritas, which he founded with the stated mission to, quote, with the stated mission to, quote, investigate and expose corruption, dishonesty, self-dealing, waste, fraud, and other misconduct. Pretty much describes Washington to a T. O'Keefe gained notoriety for his undercover sting videos showing Acorn workers helping a purported pimp set up an underage prostitution ring, Planned Parenthood workers violating abortion laws in various states, Medicaid workers in Maine helping unqualified Americans receive benefits. Now, his latest video shows a Professor Jeff Keefe, who is a researcher at the liberal think tank Economic Policy Institute. And by the way, we invited several people from the Economic Policy Institute to debate me at UCLA. They all refused. But anyway, they were this is undercover, telling someone on the phone whom they believed to be a union contributor that the Economic Policy Institute would kill a study if the findings didn't jive with the results that the backers, the people who were paying for the study, were hoping to achieve. Anyway, Jim, welcome to the show.
Hey, great to be here, and I just saw your Occupy Wall Street video, and I thought it was awesome.
Hey, which one did you see? There's a few versions, I know, although somebody, I think, just put up a 3-minute clip of one conversation that's got about 500,000 views on a website somewhere.
The one I saw was the real clear politics where you're talking to the lady from the mortgage business, and you're telling her that you pay more than your fair share. Yeah, that's the latest one. But there's a lot of other ones that are online already that they're not as good image quality, but they have a lot more of my stuff. You know, we're coming out with our own. When we went there to do that video, we brought people from Reason TV, and so they have a good quality one coming up. It's going to be going on YouTube later today. It's a 3-minute video with a link to a longer 15-minute video with some more stuff. But I was there for hours.
talking to these people. And, yeah, it is amazing. You know, they think the rich don't pay enough. My point is the rich pay too much. We're paying more than our fair share now. We need a break. And, you know, if we don't cut taxes on the rich, we're not going to grow this economy. But we got to shrink the government, because if we want big government, it's the middle class that are going to have to pick up the tab. But anyway, tell me about this latest sting operation with the Economic Policy Institute. How did you set this up, and what happened, and what's the ramifications?
Well, we were doing two different investigations, one into professors and one into journalists. We're actually calling the series To Catch a Journalist. We're exposing journalists and their cover-ups and their bias and their misinformation. And in the course of this investigation, so we were doing this investigation into Rutgers University professors. You know, Jeff Keefe is not just an EPI researcher, he's a professor in the academy. So it's particularly fraudulent for him to say he'll kill a study, because he's a professor at Rutgers University, and he said in that tape, he said, if you're in the academy, you shouldn't be killing anything. You should be, you know, publish or perish is the terms he uses. Mm-hmm. So Jeff Keefe says on tape that he will kill a study if it doesn't reach the policy conclusion. He says we will kill it. So he's implicating EPI. Larry Michel, who is the president of EPI, told me and told the Huffington Post that he wouldn't do that. So one of them is being deceptive.
But isn't that how these partisan think tanks in quotes operate? Is that they only want to publish a study that validates their perspective, and if they happen to do a study and it basically works against them, that they just have no reason to publish it, so they would just kill it, and they would keep trying to find other studies that supported their preconceived conclusions?
That is right. I mean, in Ohio, they're depending upon Jeff Keefe is a central player right now in that Ohio union proposal. So this is a big deal in Ohio, that if he's killing studies, that come out to say something that they don't like, then that's certainly fraudulent. And I think it's interesting. My greater point is that you got a White House correspondent at the Huffington Post who did basically a damage control piece. Mm-hmm. It was the front page Huffington Post story where he defended EPI, and then like a few days later we break this story. So I think it's an indictment not only of a college and the academy and Jeff Keefe, but also of the media in general, and that's why we have a nonprofit, Project Veritas, to do these investigations.
Yeah, and you would think there'd be some kind of ethical, responsibility that, hey, if you do a study and it actually proves that you're wrong, that maybe you should acknowledge that to show that you've got an open mind, that you're just not a partisan hack, that you actually are, a policy institute. You're actually considering and have an open mind. And if you conduct a study that actually refutes what you thought, that maybe you say, hey, you know what, maybe we were wrong. The facts don't verify what we thought. Maybe on this one we got it wrong. If you're just simply going to say we're going to close our eyes to any evidence that we might be wrong, then it discredits anything that you do.
I think it discredits everything you do, and I also think that I think there's a lot more of it. We actually have another professor that did something similar to this. We're releasing another part of this EPI investigation. But again, it sickens me to see the cover-ups. They're not being honest, and the journalists just kind of played defense mode. An entire statewide issue ballot is depending on this type of research, and they should be honest about how many studies they've done and how many they've killed.
Yeah. Now, apparently, we've actually got a sound bite that we can play from your call. I didn't realize we had it, but let's play it. I don't know if you know which clip we got, but let me play it and then get your comments. It's cut number 14.
So we really want to make sure that since we're putting all these tens of thousands of dollars into this, we want to make sure that EPI, if they find evidence contrary to what our intended outcome is, we want to make sure that they'll omit that kind of data.
Well, what they'll do is they'll not publish it.
They won't publish it.
Right.
Okay. Well, that's okay.
We're not going to change the results of any study, but if it's something you don't want published, we'll kill it.
All right, so that's it. That's the admission that if the study doesn't support what you want, they'll kill it. At least to their credit, they said they won't change the results.
Yes, they did say that much, but maybe I've got to wonder what's happening with Jeff Keefe right now. Because the EPI issued a statement where it was kind of, they're in damage control mode. Oh, this is a conservative organization who did this. I wonder what the private dialogue is happening right now. Is this guy going to be able to do research for them again after he said these things, or what? That's my curiosity.
Well, I would imagine that they would always say these things. Maybe they just don't think they're being recorded and played, on YouTube. But I don't know that this is, how big this news story is, that these entities are for sale, that they're very highly politicized, because I think, politicians, everybody wants to point to some evidence that proves that they're right. So it's like in a trial, everybody has an expert witness, but what expert are you going to bring? You're going to bring the expert witness that's going to validate your case, your side of the story. And so you can always find an expert to say one thing and another expert to say something else. So yeah, I don't know how shocking it is that he would do it. I would figure that's pretty much par for the course for the way these organizations work, which is why I don't think any of them are credible.
Yeah, it's par for the course, but I think that, like you said, if you get it on tape and you can hear the intonation, you can feel the vibe, the private, what happens behind closed doors, that might shock the conscience of some Americans. It's particularly because the guy's a professor at Rutgers University. He's in the academy. He has he's supposed to be devoted to the truth.
Yeah, you would think a lot of people won't know this. It could be a wake-up call because, I think back of, it's not of like the tobacco industry. Let's say they do a study internally and it shows, gee, this tobacco is killing people, but let's not publish it. Everybody would say, oh, that's terrible. That's these greedy tobacco companies. They're putting money before profits. But that's what this organization is doing. If they find that a particular policy is hurting the economy, rather than going public with it, they're going to bury it because it doesn't fit with their agenda. It doesn't fit with how they earn their living.
Absolutely, and there's more to come too. We have another tape, another professor, so we're looking forward to releasing that.
Yeah, so I'm going to go back to the older sting operation, the one that I thought I don't know what happened really, as a consequence, but I remember how much news you got off of the Acorn video, the prostitution. I watched that. I thought it was very entertaining. But what actually happened? I think that puts you on the map. But did anything happen? Has anything changed over at Acorn since you brought that out?
Well, that question is. People ask that question. No journalist in history has ever made a difference to a point where they destroy an organization in perpetuity. Some people have taken down a president But President Obama, what happened was President Obama signed a bill to defund Acorn in September 2009, and the House and Senate passed a bill to take away federal funding from Acorn. And they declared a bankruptcy, and they're probably reorganizing they have a lot of other subgroups, like in New York City, for example, they have a group that is working with the Occupy Wall Street crowd, Working Families Party, I believe it's called. So they do have kind of subgroups. I think that investigation gave them a big black eye. They lost their federal funding. They were, they fired a lot of employees. So I think it was just a pretty big black eye for them. But yeah, they're going to reorganize. And my opinion, frankly, is I don't have a problem with Acorn existing or registering poor people to vote. I just have a problem with if there's voter fraud or corruption, or what I saw, they were breaking down the doors of foreclosed homes. I think that's wrong and should be audited appropriately.
But I forget, were they getting government money? Were they getting government aid to help?
They were getting federal taxpayer dollars, tens of millions of federal taxpayer dollars, and that has been stripped away from them. And there was
and the question is, well, how many other organizations out there are getting federal taxpayer dollars, and why should any federal money be given to these organizations? Let the organizations raise money in the private sector. If they can't raise money, maybe there's a reason they're not raising money. But anyway, we'll continue the conversation. We got a commercial break. We'll be back. This is the Peter Schiff Show here at SchiffRadio.com. Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com with James O'Keefe talking about the latest sting operation on Economic Policy Institute. Hey, James, is there any legal issues regarding taping these conversations? Don't you have to get permission to do that and then put it up on the internet? Is there any problems there?
There can be. I mean, but as long as you avoid certain states and certain jurisdictions, like you got to stay out of federal buildings. I mean, I could talk at length about that, but if some states you can't film in. For example, you can't film in California, in Maryland, in Pennsylvania. Pennsylvania, it's a felony to film people. So we tend to avoid those states. And as far
so
as
the state where so the Economic Policy Institute, aren't they in Washington D.C. or you're this guy was?
They are in Washington D.C. and it is legal to tape in Washington D.C. So you can call from New York to D.C. and that's a legal phone call to record.
And you can record. You don't have to warn that you're recording, and then you can do whatever you want with the recording.
That's right. You don't. I mean, it's kind of a tricky area of the law because technology is changing so fast. With Skype and with cell phone cameras and iPhone that these antiquated wiretapping statutes in places like Maryland, people are getting arrested and charged with crimes for having a camera on their motorcycle helmet when the cops arrest, So things are changing and the law is unclear. But it's definitely legal to record people in about 30 or 35 states. You just got to avoid places like Pennsylvania, Maryland, and California where it is a felony.
Mm-hmm. Well, I mean, that's so then for people who are residing in those states, this is a lesson. You got to watch out what you're saying because you never know when James O'Keefe could be on the other side of the phone.
Well, with one exception, in areas where there is no expectation of privacy, like if you're in California and you're in a place with people around, then that's different. But if you're going undercover, you have to be. A lot of the networks, like ABC News, used to do undercover work in the 1990s. They did into the grocery stores with the rotting meat. And they got sued people get sued. I got sued by Acorn, and I've been threatened with lawsuits. NPR didn't sue me at all. They just caved. They admitted what they said in the tape. But people will try to threaten you, intimidate you. Actually, just to talking about our sting operations, just this morning we're releasing our next video in the To Catch a Journalist series. And this one involves the New York Times. So if your listeners want to see our new video, we are just publishing it right now, actually. It's called To Catch a Journalist, New York Times.
All right, well, why don't you give me a little preview? What exactly did you catch the journalist doing?
This was a New York Times consultant, and he also happens to be a professor of journalism and journalist at New York University. And he's talking about, he's almost like the stereotypical elitist media guy. He says, he's talking into a seminar of journalists. He's like, we're all in this room insiders. We're elitists. And we're the 1%. Like, you can't make this stuff up, right? And he's talking about the strategies that the New York Times uses to help legitimize Obama in 2008, help Occupy Wall Street. So these are the types of things he's telling us in this video this morning that we are releasing on ProjectVeritas.com. So my whole purpose in this is to take you behind closed doors. Maybe it doesn't shock you, but it's telling. It's not something that you hear people say in public, and I think that... Well,
what do you think was the most shocking of the things that he did say?
I think that the things he talked about regarding... he says at one point, let me pull up the quote here, he says, elites are perfectly comfortable with there being information about how they make their decisions and what their biases are, as long as that only circulates amongst the elites. He's a journalist.
He's including himself among the elites.
That's correct. That's
right.
correct.
And the rest of us are. I mean, how do you get into that category? Is it elite intellectually? Because he's not talking about the 1%. I think the way the Wall Street, Occupy Wall Street guys are, the 1% who control all the wealth. I assume he's talking about the elites who understand, who are smart, and as opposed to everybody else who's dumb.
He's talking about, that's exactly right. He's talking about media elites, in his words, Chardonnay swirling newsmen. That's literally his words. So
it's the intellectual elites. It's their snob that, the intellectual elites that understand that capitalism doesn't really work. Us fools out there that believe in the free market, we're not part of the elite. We're just part of the ignorant masses,
By the way, I did see one interview you did with, I can't remember, someone on MSNBC. It must have been a year or two ago, and he was attacking you aggressively. Was it Ed?
Well, you're talking about Lawrence O'Donnell on the Ed Show.
Was that Lawrence O'Donnell?
Yeah. Well, the thing about that Lawrence O'Donnell show, I mean, because people have tried to compare me to him when they say, hey, you interrupt your guests too, which I do, because sometimes the guests are rambling on, and I want to keep the show lively, and I want to get my opinions in there and challenge them. But the thing that Ed did, the thing that Lawrence O'Donnell did that I never do with my guests, is Lawrence O'Donnell put words into my mouth and then argued against the things that I didn't even say. And then wouldn't even let me get a word in edgewise because he was too busy arguing with himself.
I remember seeing that, and that outraged me. These people don't do themselves any favors when they do that thing. I've had that happen to me. People attack me viciously, cut my mic off. But that's why I think the media is the problem in this country, and that's why we do so many investigations, NPR, New York Times.
Oh, it is a big part of the problem because of what you're talking about, because of their attitude, because of that elitist, we know best attitude. That is the problem, because everything they do is filtered through that perspective and that view of the world. They have absolutely no confidence or faith in the average American to know what's best for himself. That's how they regard people. They think that the government, with their help, needs to decide what's best for everybody because nobody else knows, that everybody else is too much of a fool to understand what they grasp. And they have to take it upon themselves, the job of making all these decisions for us, for our own good, because we don't know better.
And I think that's another thing that I'm passionate about is the journalists tend to wordsmith and arrange headlines and prioritize. And the great thing about filmmaking and videography and undercover film is that it's just very raw, unfiltered. You can glean from so many things from it in a way that you can't glean from just a newspaper article. So that's why we do what we do, and we're going to keep doing it no matter what they throw at us.
Yeah, well, look, I appreciate what you're doing and your organization. See, how much bigger now is Project Veritas? How many more people than when you started before you did the Acorns thing?
We've got a number of volunteers, and if you want to volunteer, if you have a tip, if you're interested in helping out, go to our website, projectveritas.com, and send me an idea, and I'll get you involved.
All right, great. Hey, thanks for coming on the show, James. Everybody else, we're done with the first hour of the Peter Schiff Show. Stick around. We got another hour coming up here on SchiffRadio.com. We will be right back. Don't go away.
Stories, your freedom. The Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com. Hour 2 underway. We're taking your calls, 855-4-SCHIFF, for the next hour live here from the Hilton Hotel in New Orleans, Louisiana, here at the New Orleans Investment Conference. I gave my main presentation earlier this morning, but I still have quite a bit of work here to do. I'm going to be doing the show tomorrow from my booth here at the exhibit hall at the conference. Though I think I have a conflict, so I think my brother, Andrew Schiff, is going to be pinch hitting for part of the show tomorrow. I'm not exactly sure what part yet, but I'm sure he'll have some interesting pearls to share with all of you. Meanwhile, the rally in the stock market continues. The Dow Jones up about 250 points today, but the rout in the dollar is also continuing, as is the rout in the Treasury bond market. Bond prices falling to fresh session lows. The yields now on the 30 are up to 3.35. The 10-year above 2.31, now 2.315. The euro all the way up to 141. What's a big move? We're moving up. Let me see how many cents. We're up 2.5 full cents on the day right now at 141. Let me see if I can pull up a chart. When's the last time the euro was at 141? This is the highest we've been since September 2nd. September 2nd. The next area of maybe some resistance is going to come in around the highs of 144, 145. You got a triple top around that area going all the way back to June of this year. I think those highs are going to be taken out. There is a lot of momentum to this move in the euro, which I think will continue for, at least a few more days at a minimum. but that is going to spell a lot of trouble for the dollar. It's also going to be music to the ears of the commodity markets, the oil markets. Again, oil's still up better than $2.50 a barrel, but the chart looks really, really strong. I think we're having to run up to 100 and change soon. Who knows? Maybe even by next week. I wonder if anybody in Washington now, remember, these guys were so excited about oil prices coming down when they got back below $80 a barrel. Hey, this is great. This is going to be a tax cut for the American people. Yeah, right. That's already been reversed. So people are so quick to jump on a short-term move in the market and read some major change into it. These trends, these long-term trends are there. They're in motion for a reason. I think they're going to stay in motion. And when guys like Ben Bernanke come out there and say that the inflationary pressures are transitory, what are they basing that on? I mean, they're certainly not basing it on reality. Look at the trends. These price increases are not likely to reverse or likely to continue. I mean, I don't know. He's hoping, but he's betting our whole monetary policy on what he hopes is going to happen. Because surely he can't be basing it on his track record, because his track record is horrible, right? Everything he thinks is going to happen doesn't, right? He's wrong almost consistently. So clearly he can't think that inflation is transitory because he's done such a good job in the past of figuring things out. He's done an abysmal job, and so I guess it's just blind hope. That's it. That's all he's got. Anyway, let me go to the phones. Although, actually, I'm going to quickly go to the phones, and then I forgot I wanted to go back to the sound I was playing of Timothy Geithner. I never even got a chance to comment on the first clip that I played, but let me take one phone call, and then I'm going to go back and talk about the Geithner stuff, and then we'll take more calls. Anyway, on hold is Paul calling from Denver, Colorado. Paul, welcome to the show.
Hey, Peter.
Hey, how are you?
Great. You're a real gem. I appreciate all your wealth of information.
Thank you.
Got a question for you regarding the Greek debt.
Yes.
In comparison, about our national debt's $15 trillion. I've heard theirs is $500 billion. Is that true?
I'm not sure what the exact amount is, but I read this statistic that said that the new plan that includes a 50% haircut on Greek debt, the plan is to get their debt to GDP down to 120% by 2020, and that's after the haircut. I mean, so they have got a monumental amount of debt. But I think my point is we actually have a lot more debt than that $15 trillion. I think that's the tip of a big debt iceberg.
And I agree. I understand why you say that. I was just trying to get a grip on when they said there was a 50% write-down on Greek debt. What did that mean in relation to their published debt? And it really doesn't mean much if it's projected all the way out to 2020 when things can change overnight. I
don't know. I think what that means is that they're taking half the debt off the table. It's basically if they owed 100 billion euros, now they only owe 50 billion euros. I don't remember the exact amount. You can probably Google it online and figure out exactly how much Greece owes. But I know that in proportion to its economy, it's a big number. In proportion to the global economy, it's a spit in the ocean. It's not like what America owes. What we owe is not only enormous as a percentage of our economy, but it's enormous in actuality as a percentage of the global economy. I mean, this is a big deal. If Greece can't pay its debts, I mean, that's just a nuisance. It's not the same thing as America not paying its debts.
Right, and I'm intrigued by some of the details when you hear these broad-based plan, but you don't hear any detail. I thought maybe there was some detail out there that could be had on how long. For example, you're telling me this projects out to 2020. I couldn't find that detail.
No, well, that was just in the news. I mean, all the news stories, you read them on, you hear them, and they're saying this is what they're hoping. That's their goal. I mean, talking about having a low bar, right? Getting the debt down to 120% of GDP. I mean, they ought to get their debt down to 30 or 40% of GDP. I mean, something realistically manageable. But they don't even have that as a goal right now.
Does this kick in any credit default swaps?
That I'm not sure. I think that was part of they were trying to avoid that by having a partial default that happened in such a way that it wouldn't obligate. I don't know all the details. I haven't had a chance to read up on them. But I know that was part of the goals. But they are shoring up the banking system. Not only are they putting together a bigger bailout fund, but they are requiring the banks to increase their net capital, I guess, to guard against any potential contagions that might result from any of those types of obligations being triggered.
Right, and I saw the article. They increased their fund from $1 trillion to $1.4 trillion.
No. They increased it to $1 trillion. It's $1.4 trillion, but it's 1 trillion euros.
And when they increase it, is that just more money printing, or did they collect it from somewhere?
Well, it's the ECB committing more money to the bailout fund. Yes, I mean, they're going to print it, but they're going to sterilize it. I mean, that's one of the differences between their quantitative easing and ours, is that there's some sterilization going on where they're going to have, if they're going to buy up Greek bonds or Italian bonds or selling other bonds to pay for it. And so they're not just running their balance sheet like the Fed did.
Got it.
But anyway, hey, thanks for your patience and holding on. We got a break. We'll come right back. We're going to be talking about Timothy Geithner and the U.S. economy. We'll be taking more calls from the exhibit hall here at the New Orleans Conference in New Orleans, Louisiana. We'll be right back. This is Peter Schiff. You're listening to SchiffRadio.com. And this is Peter Schiff here at SchiffRadio.com, coming to you live from the exhibit floor here at the New Orleans Investment Conference. Anyway, I want to go back to my discussion of Timothy Geithner. I started playing some of his interview on MSNBC. Now, I'm going to replay the cut that I played a while ago because we've had a guest on. A lot of time has gone by. Some of you might not even remember what was said on this cut. So I'm going to refresh your memory. I'm going to play it again, and then I'm going to comment. So this is cut number 6.
Is the economy getting worse?
It's still very tough out there. I think people are very frustrated and still hurting a lot.
But is it getting worse?
The economy as a whole, the economy is just not growing fast enough.
Are you convinced we've hit rock bottom? Could there be a second recession?
I think the strength of the economy right now depends overwhelmingly on two things. It depends on how successful Europe is in resolving its financial crisis. But it also depends on what people do in Washington. And again, if Congress does not act on these proposals in the President's Jobs Act, then taxes go up for all Americans, most Americans. They go up for most businesses. Growth will be weaker. More Americans be out of work longer.
So, in other words, it all depends on two things. Two things. One is Europe, right? So somehow what happens in America now is determined by what happens in Europe. We don't control our own destiny. We're just at the mercy of whatever happens to happen in Europe. Or Congress. Congress has to act and pass something, or the economy is going to get weaker. Well, what about all the stuff that the president has already done? So that doesn't count for anything? So none of the things that he's done in his first, 2.5 years in office, or however long he's been there, none of this matters, right? Or 3 years? How long has Obama been there? But so all the stuff he's already done, that means nothing, right? It all depends on what happens in Europe and what Congress does in the future. And if Congress doesn't do the right thing, then the economy is going to get weaker. Well, didn't he promise to improve the economy? What about his stimulus? Obama got a lot of his agenda already passed. Remember, he claimed that if we passed his Obamacare, that this was going to be a big boon for the economy because it was going to bring down health care costs. Instead, health care costs are rising 50% faster now that we got Obama's bill passed. Isn't he going to accept responsibility for that? What about his original stimulus? What about all the stuff that they did a year ago, 2 years ago? Didn't that work? The economy is not going to get better. None of that counts for anything, right? Obama. If the economy gets worse, if unemployment gets up, none of it is his fault. It's all because of Congress not passing another plan, and it's all because of Europe. That's some nonsense. But anyway, let's continue to get more from Timothy Geithner here at number 7.
Did the president take his eye off the ball
Absolutely
on jobs?
Not. Absolutely not. He was relentlessly focused on it. And in fact, he was doing things that were deeply difficult politically for him.
But people say he was focused on health care, not on jobs in the economy.
We were passing a Recovery Act that made huge investments in getting Americans back to work, helped restart economic growth. He was rescuing and restructuring the American automobile industry, which is at the brink of failure. He was fixing a terribly damaged and broken financial system, and no economy can grow without a functioning financial system. Those were all about jobs and about trying to protect the economy from a devastating crisis.
So here he's contradicting himself. He's saying that President Obama fixed the financial system. He restructured the automobile industry. He passed his Economic Recovery Act with huge investments in getting Americans back to work. So if he did all this, where's the payoff? Where are all these jobs that Geithner just claimed that they created? He said he did everything. How is it now that none of that matters? that the economy is weakening because a Congress isn't acting to do something else? You know, the truth of the matter is maybe he's right in that the president didn't take his eye off the ball because he never had it on the ball. He doesn't even understand what the ball is. He doesn't even know what game we're playing. He's playing his own game. And if Geithner's going to try to give Obama credit for doing all these great things to fix the economy, yet the economy is still broken, whose fault is that? Maybe, just maybe, he didn't fix anything. Maybe what Obama did is break it even more. That's the problem. Not what he didn't get through, but all the damage he's already done based on what got through, what Congress has already passed. That is the problem, not because they're not going to pass something else. The problem is all the things that they've already passed and all the mistakes that they continue to repeat, not only mistakes from the Obama administration, but mistakes that he simply copied from the Bush administration. Anyway, let's hear. I got a little bit more cut number 8.
What do you expect unemployment will be on Election Day?
Depends what Washington does in the next 3 months, in the next 6 months. It depends overwhelmingly on whether people in Washington, Republicans, are willing to join Democrats in doing things to help make economic growth stronger.
Will it likely be more than 9%?
If they act on these proposals, then growth will be stronger and unemployment will be lower, and you'll see more Americans back to work. If they don't act, then we risk a weaker economy and higher unemployment.
Are you just using this to blame Republicans?
No, it's just a basic reality. The president has some authority. He's using that authority. You heard him announce yesterday ways to help Americans refinance their homes, but there are limits to what he can do, and he cannot compensate for a failure of Congress to act.
Yeah, well, what if Congress feels that in blocking his plans, they're actually preventing him from doing more damage to the economy? You know, if President Obama sees that his plan is not making it through Congress, what is his job as president? His job is to try to figure out what kind of plan will make it through. If he actually thinks that the whole recovery is riding on some kind of government plan, as if the other plans haven't been enough, what he should do as a leader is to try to work with the Republicans and try to figure out what kind of jobs plan will you back. Because there's a lot of things that can be done to really unburden the American employer, because that is the real problem for jobs. Why aren't jobs being created? Because it's too costly and too expensive to create those jobs. And whose fault is that? It's the fault of the government. It's the fault of Congress, the president, all the rules and regulations that are encumbering our businesses and making businessmen do everything they can to avoid hiring people that they would ordinarily want to hire if it wasn't for government artificially increasing the costs and liabilities associated with hiring. And these things, these repeals and reductions of cumbersome rules and regulations, you know, starting with things like the minimum wage law, but working its way up from there. There are a lot of things that the government can do, regulations that they can repeal, that cost nothing, right? It doesn't increase the deficit. They don't have to cut any of these programs that they like that should be cut. They can cut a bunch of rules and regulations and red tape that really nobody likes. Now, I know people think, oh, these are well-intentioned rules. Yes, this minimum wage law means people get paid more than they're worth. No, it doesn't. It simply means that a bunch of people can't get jobs because no one can hire them because no one's going to pay them more than they're worth. The government can't do that. The government can set a minimum wage, but they can't force anyone to pay it. All they can do is say, here is the level. Here is the minimum level of productivity that a worker must have before he's allowed to work in this country. And if not, well, he's not allowed to work, and employers are not allowed to hire them. And it's not just that. It's all the other rules and regulations that we pile on top of the minimum wage that makes it so much more expensive to hire people. The minimum wage is just the starting point. We've got more costs that are run on. So instead of that, instead of the president, he's trying to work with the Republicans, he's acting like a spoiled little kid, nya. If I can't get it my way, then we're not going to do anything, and I'm just going to blame the other guy. That's not what a president is supposed to do. He's not there to blame Congress, right? He's there to try to figure out what I can get through Congress. And if this plan isn't getting through Congress, if he can't convince the opposition that his plan is sound, then you know what? Maybe he should think that it's not sound. And maybe he should take some of their suggestions to heart. And I'm sure if he sat down, he can come up. If he really thinks that the recovery is riding on passing another jobs bill, he could get it done if he had the right kind of bill. But that's not what he wants. right? He wants to blame the failure in the economy on the Republicans. He wants to take that focus off of himself, right, and put it on someplace else because he knows the economy is going to get worse. He just doesn't want to be blamed for it. He wants to blame something else, and this is a very convenient way politically for him to do that. Anyway, we'll be right back. This is Peter Schiff here at SchiffRadio.com. And this is Peter Schiff. You are listening to the Peter Schiff Show and SchiffRadio.com live from New Orleans, Louisiana. We are taking your calls, 855-4SCHIFF, 855-4SCHIFF. We do have open lines. If people want to call in, there is time if you call soon. Anyway, I'm going to go back to the phones. On hold now is Tony calling from Chicago. Tony, welcome to the show.
Hi, Peter. Thank you for taking my call.
Thanks for calling.
My question is regarding property tax. Now, they keep telling me, and I went to a lawyer, and they got my assessed value lowered by $2,000 to $3,000, but I don't see any decrease in my property tax amount that I owe. Is it because maybe there's a lot of foreclosure in the house, around my area, and then they're not getting enough revenue, so they're just not really lowering it? Is it even?
Well, I don't. It depends on where you live. Property taxes, are different depending on what the rules are where you are. I know where I am in Connecticut. The way they work it is they assess the property values kind of every 6 or 7 years to put everybody kind of on the same footing. And so even if you buy or sell a property today, the value is not based on what you pay. It's based on what the assessed value was the last time they did it, even if you're paying more or less than what that assessed value is. Because what they do is they just decide how much money they want to raise, and they know how many properties are there, and they just kind of figure out what the taxes have to be based on what the assessed values are. So, for example, people that live where I am in Connecticut, even if the next time they reassess our property, right, if the property values have gone down by 50%, let's say, and it hasn't been probably that bad, but I'm just throwing it out there, they're going to have to double the property tax rates because they need to collect the same amount of money regardless of the value of the property. So the value of the property determines what the rates are where I am. So the higher the property is worth, the lower the rates are going to be because then it's they can collect the money. But if the property values go down, then they're going to have to jack up the property rates to keep collecting the same amount of money. In fact, they have to collect more because like all state entities or local entities, they're inefficient. They keep giving raises to the teachers. They keep hiring more bureaucrats, and so they're going to have to raise the property tax. They're going to have to collect more in property taxes, and if property values are low, they really jack up those property taxes. And, of course, what that does is that actually depresses the real estate market even more because it makes it harder for people to afford the lower-priced house because even though the house is coming down in price and, therefore, the potential mortgage payment, the property tax is actually going up.
Right. I think I think that is what is happening here because, they're saying that, if you lowered your assessed value by $2,000 from $30,000 to it's now worth $28,000, but then I don't see any decrease in anything in my property.
Yeah, well, they may very well have raised the property tax rates, and so even though your property has a lower value, your rate has gone up, and so now you're paying the same. In fact, you could end up paying more in property taxes even as your property is losing value. And I think that's going to be happening for a lot of people because the states, or the cities need the money. They're not getting it as much in other tax revenues. Maybe they're not getting as much in sales taxes or other business taxes because the economy is weak, and so they end up having to stick it to the homeowner in terms of higher taxes. And, everybody's taxes are going to go up until we address the driving problem, which is big government and government getting bigger. And if we don't want our taxes to go up, we got to shrink government. And I used to say this all the time when I was running for Senate, when people would say I was in favor of, cuts of government workers, and people would say, well, we can't do that. We have to fight for the workers. You don't want to be against the workers. And I'll say, I am fighting for the workers. I'm fighting for the workers who are paying the salaries of the people that work for government. Because every time we give a raise to someone who works for government, we cut the salary of everybody else. Because it's the people in the private sector that have to pay the salaries of the people who work in the government sector. And the only way to give the public sector a raise is to cut back on what we're paying our workers in the private sector. In the government sector.
Yeah, I agree. Hey, Peter, I had another question. It's regarding to the comment that you made yesterday regarding the Obama trying to bail out those student loans. I know you gave an example where somebody's going to make or is going to earn $30,000 a year, and you said the discretionary income will be $15,000. How did you come up with that $15,000?
Well, the government, what the government says is, if you're a student now, and this is a new rule that's about to go into effect, and it basically says that the most you have to pay in any 1 year on your student loans is 10% of what you earn above the poverty line. And actually, I think I was wrong. I think the poverty line now is higher. I think it's closer to $15,000, which means you only have to pay on what you earn above something like $22,000, $23,000. So if someone earns $30,000 a year, they're only going to be paying $700 a year against their student loan, even if they really owe $5,000 a year or something like that. I mean, this really is a massive forgiveness of student loans. It's going to put a huge liability on the American taxpayer. Look, I think that we did our kids a big disservice in lumping them on with all this student debt. And I would be amicable to the idea of forgiving a lot of this student debt, because I think America we really screwed our young people by suckering them into these big loans. And maybe there would be a way to get some of the money back from the universities, so it's not all going to come from the backs of the taxpayers. But the only way I would be in favor of some kind of loan forgiveness is if we eliminate all government guaranteed loans or direct government loans to students in the future. Because if we don't do that, it's just a windfall for the colleges and universities that now can jack up tuitions even faster, as if they hadn't been raising them fast enough in the past. They're now going to rise even faster, and we're going to have a huge ongoing obligation on the American taxpayer. So what Obama did is the worst of all possible worlds, which is, I guess, what you would expect from the president, because if there's the absolute worst thing that you can possibly do, you can count on President Obama to do it. Anyway, hey, thanks for your call. Going to move on to Scott calling from Washington, D.C. Scott, welcome to the Peter Schiff Show.
Hey, Peter. Good to talk to you. I'm a big fan. Anyway, I wanted to mention two reasons why I think CEOs are, even non-export CEOs, are big fans of inflation. And that is because, number one, their stock options don't take into account inflation, and they're just based on the stock up in price, and they don't really take into account deflation. And then the other reason is like earnings reports normally don't take into account inflation either. Hey, did your earnings go up? Not, are these earnings worth more?
Well, yeah, absolutely. Look, inflation lowers the bar for everybody whose performance is based on the price of something. Because if the government creates a bunch of inflation, prices are going to go up, even if you're not really doing a good job. I mean, let's say that I'm running my company and inflation is 10% 1 year, and I managed to increase the share price and the earnings by 8%. Well, are my shareholders better off? Well, not really, because inflation was 10%. My earnings grew 8%. My stock price went up 8%. I actually lost money. My clients, my shareholders would be better off if there was no inflation and the stock price had stayed the same, because that's better than having 10% inflation and your stock price go up 8%. But if the stock price goes up 8%, if I get compensated, if some options kick in and I can sell some shares at a huge profit, I can make a lot of money, but I really didn't create any value. There was just a bunch of inflation. And yes, a lot of people profit from inflation. That is one of the reasons that it continues, because there is a vested interest, a constituency that wants inflation. Of course, the biggest beneficiary of inflation is the government itself, which is why it creates so much of it. But there are people in the private sector that gain from inflation. But of course, there are people that lose. The shareholders are losing. They're compensating their managers for creating value that they didn't create. They're actually getting poor. And of course, the creditors lose. There are a lot of people that lose as a result of inflation. That's what I dedicated my investment businesses to, is to try to protect the losers. The losers are the people who have savings in dollars, that have CDs, money markets, government bonds. They have cash value in their annuities. They have fixed value annuities, or they have cash value in an insurance policy. They're getting clobbered. They're the big losers, and they have to do something about it. They just can't stand there and take it like a patsy. They got to get rid of their dollars, get gold, get silver, get foreign stocks, before it's too late. Oh, anyway, I lost my caller. I didn't realize that. Hey, while I'm on the topic of inflation. Look at what's going on with the markets now. Gold now up $14, silver up $1.40 an ounce on these ETFs. That's moving. The dollar is just getting clobbered. We're going through now the 75 handle with the dollar index trading in the 74s. The euro solidly above 141, 141 and a quarter on the euro. Aussie dollar now almost up 3 full cents. This is one of the biggest moves I've ever seen to the upside in the Australian dollar in a single day, with the Aussie dollar now at 107 and a quarter. Of course, it's not just the Aussie dollar. A lot of currencies. The Canadian dollar up a full 1 cent today. That's, I guess, not as big. Look at the New Zealand dollar, up huge, up 2.5 cents. The New Zealand dollar all the way up to 82 cents against the U.S. dollar. That is not a record high for that currency, but, you know, it's moving up in that direction. We're seeing these moves across the board. Oil price is now trading $93 a barrel and rising. Again, all of this the result of the weakening dollar, which was kicked in by the agreement in Europe overnight. People are now getting into stocks. They're buying commodities. And how are they financing it? They're getting rid of their dollars. They're getting rid of their treasuries. And, you know, this is a big trend. I've been warning that this was coming for some time. It's here. It's not going to be a crisis just yet. We're going to have to let these trends continue. We're going to have to let the dollar continue to fall for a bit, let commodity prices like oil continue to rise for a bit, and then it has the potential to develop into a crisis. Anyway, I think I hear the music coming in. We'll be back. We got one final segment coming up, so stick around. You're listening to the Peter Schiff Show here on SchiffRadio.com. This is Peter Schiff here with the final segment of the show on SchiffRadio.com. And, you know, this morning, with all the news coming out of Europe, I forgot we had some economic news coming out of the United States. We got the numbers, the first look on third quarter GDP, coming out pretty much as expected, 2.5% annualized growth rate for the third quarter. Of course, the economy didn't grow by 2.5%. It grew at an annualized rate, meaning if you took the growth rate and multiplied by 4, you would get 2.5%. Now, that is a faster pace than the economy had been growing by. In fact, if you average the first two quarters of the year and then you annualize that, we were growing at a rate of 0.9%, so less than 1%. So we'd have to do another 2.5% in the fourth quarter before you would average the 2.5 to the 0.9 to get the entire growth rate for the year, which would still be extremely low, well below a 2%. But, of course, I don't think the economy is really growing. I think it's an illusion created by government statisticians. First of all, the strongest part, if you want to call it strong, in this number was consumer spending, which had a big increase over prior quarters. Is it a good thing that American consumers are spending? I don't think so. I think they should be saving. The question is, why are they spending more and where are they getting the money? What if a lot of them are getting the money because they stopped making their mortgage payments? Is that a good thing that Americans are spending money instead of making their mortgage payments? I don't think so. That's creating a bigger hole in the financial system. Hey, what if Americans are spending more because they're putting it on their credit cards? What if Americans are putting things on their credit cards because they owe so much already that their intention is just to not pay? And since they figure they're going to go out anyway, they might as well go out with a bang. So is it a good thing that people are buying things with no intention of actually paying for it? I don't think so. And, of course, one of the reasons that I think that consumer spending is up is because the things they're buying cost more. I think it's more expensive to spend. The things they're buying cost more. Now, I don't think the government accurately reflects that. They're supposed to use the GDP deflator to take away the inflation effect, but I don't believe that deflator is honest. I don't think they're deflating that nominal number enough. And so I think that these growth numbers are an illusion. I think we are back in recession. That's why the consumer confidence numbers are as low as they are. That's why the popularity of Congress and the president is as low as it is, because the public knows the truth. They don't care about these statistics. They know how bad it is because they're living it. You know, Washington, they're living in their own fishbowl. It doesn't matter. They're living high on the hog on taxpayer money. And, yeah, people in Wall Street, they're living off of the cheap money from the Federal Reserve. So from their perch, everything looks great. They just got to come down to the streets where everybody else is operating to see just how bad things really are. Anyway, I wanted to go back and play a little more sound. Where do I have my sound? First, I got, you know, the Tea Party. We continue to have people trying to turn the Tea Party into this racist organization. We constantly hear the cry of, oh, racism, the people at the Tea Party are racist. And I've got this clip. Now I thought I had it right in front of me, and I'm trying to pierce through it. There's a lot of stuff here. I think this is it. This is it. It's cut number 9. It's from MSNBC. It's from Richard Kim of Nations Magazine. Again, trying to play the racist card with respect to the Tea Party. Here, it's cut number 9.
When you talk to Occupy Wall Street people, they think that Washington is wholly owned by Wall Street. And they're mad because Washington hasn't done enough, right, to fix the economy. When you talk to Tea Party people, they think Washington has been overrun by special interests. And what they mean by that are unions like SEIU, Acorn, and Van Jones. And what they think the problem in Washington is that it's redistributing money away from the top to the bottom, actually. And one of the sort of key polling points around that is that when you poll Tea Party people, they think government does too much for black people. I mean, that is really one of the markers of whether you're in the Tea Party or not, how you respond to that question.
First of all, has that question even been polled? Has anybody actually done a poll? I'd like to see that poll where the question was, do you think the government does too much to help black people? Because I don't think anybody's ever asked that question. Now, maybe I'm wrong, and if somebody actually sees evidence that poll exists, I'd like to see it. Now, I understand that the Tea Party is against government redistribution of wealth, as they should be, but they're not objecting to it because black people are the recipients of that redistribution. They don't want their wealth redistributed to anybody. Doesn't matter what their race is, white, black, who cares? I never hear the Tea Party wrap this argument in a racist language. It's only the people who want to criticize the Tea Party that talk like this. Maybe they're the ones that are the racists. What is it that maybe it's this individual? He just assumes that all the poor people are black? There's no white people that are collecting welfare. There's no white people that are benefiting from wealth redistribution. It's all about race. It's all about taking money from white people and giving it to black people. The Tea Party's not saying that. That's what this guy is saying it. Again, the racism is not in this Tea Party, but it's coming from the left. It's the people who criticize the Tea Party. What they're doing is they're showing their own racism. It slips out in their critique. Anyway, also, I got a little bit more sound on Barack Obama. We played his minion, Geithner, trying to scapegoat the Europe or the Congress. But here is President Obama dishing out the same nonsense directly, trying to excuse why the economy is not getting any better. Of course, it's not his fault. It is Congress's fault. This is going to be the refrain. Instead of running for re-election on hope and chains, it's all going to be, hey, things could be worse, and it's not my fault. Blame Congress. Anyway, here he is, Obama, speaking at the University of Colorado, cut number 10.
So the truth is, the only way we can attack our economic challenges on the scale that's necessary, the only way we can put hundreds of thousands of people, millions of people back to work, is if Congress is willing to cooperate with the executive branch and we are able to do some bold action, like passing the jobs bill. That's what we need.
So, again, that is the only way. The only way that we're going to create jobs is if we pass this new bill. As if none of the stuff that he's already passed, that Geithner was on television saying how great it all was, how he fixed everything, how he already passed the jobs bill, that created all these jobs. None of that matters. It's all riding on whether or not Congress passes this new plan exactly the way Obama wants it. And if they don't pass exactly what he wants in the exact manner that he wants, then the whole economy is going to collapse. Nothing else that he did has anything to do with that. It's all Congress's fault, and we just got to get rid of Congress, right? That's it. And if he really believed that, and if he knew that Congress wasn't going to pass his plan, what would a statesman do? Go back to the drawing board and come up with a plan that would pass. But that's not what Obama wants. He doesn't want a plan that passes. He wants his plan not to pass so he can blame the problems on the Republicans. Because you know what? If his plan passes, it ain't going to work. The economy is going to get even worse, and then who is Obama going to blame? The fact of the matter is his best chance of getting reelected is that this plan doesn't pass, and he can blame Congress for the mess that he is helping to create. Anyway, hey, that's it for today's show. We'll be back again tomorrow from New Orleans with another live 2 hours of the Peter Schiff Show here at SchiffRadio.com. And don't forget, look on YouTube for the brand new my trip down to Occupy Wall Street. It should be a good one from I forget. Anyway, that's it. We'll be back tomorrow. This is Peter Schiff on SchiffRadio.com. Bye.